The real estate market has shifted. Well, that's yesterday's news. Today, sellers are looking around wondering, why isn't my property selling? Could it be the price? We'll get into that right here. Interest rates are still relatively high and haven't got the cut that they've been talking about for the last 3 years. Insurance premiums are going up if you can get it. Here in California, if you're close to the hill or close to the water, good luck. Buyers are timid. The buying pool is shrinking and the seller's inventory is growing. So what kind of a market are we in, really? My name is Jeff Belzer. You're watching Living Coastal in Ventura. And when you watch this video, you're going to see a link to other videos of other agents like me who are deep embedded in the data of the inventory of their market from Canada to Florida, all across the US, even out here to California. And we're going to take a deep dive into the data and what the reality really is. Although there's these negative headlines, titles, and realities, there is a resiliency that we're seeing. And a lot of it is price point specific. But could it be any different? How long could a good thing last? With interest rates, staying as low as they did since 2010, 8, 9, and 10, all the way to 2020, with the start of the pandemic, and continuing on, we've kind of reached that ceiling. As the Fed had to respond to the hyperinflation to raise the interest rates, we were hoping it wouldn't go so long. And a lot of times, you'd have that Fed speak about getting those cuts and kind of putting things where they need to be for us in the real estate industry. But with all that inflation, it just wasn't happening. So you'd expect there to be an inflection point, a turning point. Well, we're finally here. And the good news is that it's not that crashy and it's not that bullish either. Like it's going to go up to outer space. It's not going to the moon. So it's really nice to kind of have a market that's leveled off. And I actually think these are the perfect moving markets because these are markets they're really for the people who have bought property already. It's not a great first-time home buyer market, honestly. But it's a great market if you're trying to move up or move down because while sellers have a scarcity of buyers to appease, you got a better chance of getting your contingency sale to repurchase accepted or doing trading like that or maybe selling prior and then moving. So there's advantages. We're going to get into that right here about what advantages we're seeing for buyers and what realities we have to see for sellers. So let's start with the sellers. So coming off a good high, like that pandemic market, what I call the post-pandemic narrow inventory peak, when inventory thinned down. Here in Ventura, it got down to 54 units in the city was how thin it was. And it's about 210 right now. So, it's increased 75%. There's 1 in every 4 houses about in every neighborhood. Some subdivisions, 8 houses. So while there might be a pool of 8 buyers looking at one house, now you have 1 or 2 buyers looking at like 8, 9, or 10 houses. So it's definitely getting thinner. So but with absorption, these properties are getting absorbed as long as they're priced right. And some of the strong points, let's go into some of the strong pricing. So first-time home buyers, if you guys are watching this, don't get discouraged. There is a pricing point. In 805, I figured out that it's about $500,000 to get into real estate, whether you're buying a mobile home on land, a condo, a townhome. You're going to be in at about $500,000. So 500, 550, and that's some really great 2 1s and 3 2s, and from Oxnard, Camarillo, and Ventura. Those cities get some great condo and townhome options. Those are going to go up to 650. Once you start getting into the 7s, they're definitely getting nicer. You have the HOAs, but then you start getting to that point of maybe I want a single family house. So that's the cusp. We'll see single family homes, sometimes major fixers, almost tear downs and 6s, and about the 700s, you have, fixers, 7 and 8s. But if you're getting into that price point, you're probably going into the single family market. Let's talk a little bit about the single family market. Very strong from 800 to 900,000. The absorption rate is very strong. We're seeing, anywhere from, if there's 18 homes priced there, we're seeing 18 go under contract. We're seeing 18 sold. Very consistent. It also stays consistent, but in the 900,000 to 1 million, about 14 properties, and then 5 are going under contract, and then another 14 sold. And we've seen that consistently. We're looking at data every single month: January, February, March, April. Right on the cusp of March and April, we saw it go up to the active listings hit 200. Well, today they're 210. We just had the broker tour, but part of that little uptick is you had last week with the 4th of July, you had folks that were maybe not putting their home on the market. So we pushed up a little bit. But when we talk about absorption, those are the homes that are going under contract. And kind of absorbing what's going on. It's how much time it takes, typically 3 months, 3 to 6 months, being a normal market. Ventura always averaged around 2, and that's kind of where it is, depending on the prices. If you're in the condos, townhomes, and single family homes from 8 to 1.2 are being absorbed between 30 and 60 days. If you have luxury housing between 2 million, 3 million, or 3 million and up, those are sitting 60 to 120 days. Some of those are expiring. That luxury market has definitely slowed down. People are on pause there, but I think we're going to see a big swing coming soon, because eventually these interest rates are going to drop. People are waiting for either prices to drop or interest rates, but it seems like this fall is going to be that magic moment where we see interest rates come down a little bit and prices come down a little bit. So there is that relief. Like I was saying before, this is more of the movers market, people with equity, retirees that may be wanting to downsize out of their larger homes into smaller homes. They just need the interest rate to go down just a little bit more, and they're going to be moving. So we've seen a lot of people commit to moving by listing their homes. But if they don't take reductions and they pull their homes off and go to expired, now we've seen people like Ricky Cruz say that, and it's possible. They're seeing it in other states. It might happen here. I've seen that nice level off around the 200. It's been there about 8 weeks, which is kind of refreshing, because it would really seem crashy if we hit the 230 mark already. I do think that inventory is going to push up towards that in the fall, just because things tend to slow down on the buying side. So if we have a surplus of leftover listings that don't either get put on hold or expired, canceled, or pulled off, we could end up with a surplus of inventory. However, if we end up having the interest rate drop, it could be a total, buyer's market where they get that sweet spot where the prices had come down 5 or 10%, the rates maybe go down a whole point, and all of a sudden you're saving almost like $800 or $1,000 a month. And if you were shopping for the last 2 to 3 years, like, you want to fulfill, you've been, beat out by multiple offers, and now you have a chance to get something that's palatable for you. You have good income, good job, good career, good family, good network, and you want to be here. There is an option for the first-time home buyer. So don't be discouraged by address the sellers real quick before we go. I want to let them know that some of you guys, you're in the field of dreams. You're looking at that incline of that narrow inventory when things were kind of ramping up, and you're going 20%, 10 or 20% beyond what those sales that probably got pushed up 10 or 20% higher than they should have been. We started having those rate hikes to kind of slow things down. That's kind of where our real flattening is, and we've kind of hit a peak and kind of came back down into that gully, and that's where we are. We're probably going to be here for the next year and a half, and this is the movement. This is the new foundation that we're in. Barring a black swan event where some catastrophe happens that really takes liquidity out of the market and people sell for salvation. We're not in that, and here's the big difference is in the last market. It's not just what caused it, but it's like what people were selling because they were selling for salvation. They had to get away from a debt that they owed that was more than that they could deal with, and they didn't have any equity to get back from it. Now people have a really low cost with their low interest rates, and some of the prices they paid this last decade. A lot of these people have owned the homes for the last 10 or 15 years or even longer than that, and they've been through these waves of low interest rates, so there's so much liquidity. It's like a lot of the owned homes, that's the cheapest expense that people have. So that's the foundation of real estate. So people buying in, they have to pay for all of that if they're first-time home buyer. But people trading, it's just like trading places and trading equity. So it's not as stressful, but it's not crashy. I hope that's a good explanation that you guys can see that although there's strain and stress in the market, it's not a crash. It's not That's not what we're dealing with. It's just sensationalism. But it's the good part is like, oh, we're starting to see some stability. We're starting to see some affordability, because runaway inflation, that's not fun for anybody. You're just chasing it the whole time. So you're not going to get an immediate return, like it's going to go up in 20% in a year or two. But what's great is you can put your roots down, be somewhere 3 to 5 years, look back and probably be well into your amortization schedule another 3 to 5 years, and you're really sitting good where you can be in a trade-up situation. I'm meeting with a client tomorrow. They had actually grown up here in Ventura, and less fortunate circumstances, got into a position where they're able to buy a house. We competed, I think it was like 2015, competed against cash offers. We were able to secure an FHA loan on a condo, and they fixed it up. They realized a lot of equity, and they want to keep that one and buy another home. We're going to be shopping for homes tomorrow. So the real estate dream is real. It's very real. It's very attainable. So not to be discouraging, but we just want to look at this data, analyze it and see what are these opportunities to make these moves. And this is the one. So we're not waiting for this big crash, like, oh, it's not low enough. It's like, no, if you've got a good income and you have some savings and you have a down payment, like, now's the time to make a move. So go ahead and reach out, follow if you like and subscribe, and we'll see you soon.